When you click buy on a stock, what actually happens next? We tend to focus on the trade itself, the price, the timing, but the real magic, the stuff that keeps the entire market from just falling apart, happens completely behind the scenes. We're going to take a look at this invisible engine that powers our financial markets.
So, before we jump into all the mechanics, I want you to think about something. It's a really simple question, but it gets right to the heart of why this whole system even exists.
Really think about that for a second. You've just made a deal, probably with a total stranger who could be anywhere in the world. What's the guarantee they're actually going to deliver the shares they promised? And on their end, how do they know they'll get your money?
Right. Every single trade is a promise. And in a market making millions of these promises every day, you need something to prevent them from being broken. This is the fundamental problem, and it has a name: counterparty risk. It's the risk that the other person in your trade just fails to deliver. If that happened regularly, confidence would just evaporate and the market would grind to a halt. So, how do we solve this massive trust issue? Well, the solution is pretty brilliant, and it's the bedrock of modern finance. Instead of having millions of traders trying to trust each other directly, the market puts a central, super trustworthy third party right in the middle of every single trade. Let's give this entity a name: the National Securities Clearing Corporation Limited, or NSCCL. Think of it as the ultimate guarantor. The moment your trade goes through, the NSCCL steps in. If you're the seller, the NSCCL is now your buyer. If you're the buyer, the NSCCL is now your seller. And just like that, your direct risk with that anonymous trader on the other end, it's gone. Your deal is now with the NSCCL. And this quote right here, it pretty much sums up their entire reason for being. The whole point of the NSCCL is to make sure the market runs smoothly and that every single participant has total confidence that the system will work. Every single time. It's the foundation of market trust. Okay, so how does the NSCCL actually do this? How does it manage all of this? Well, it's basically a two-stage process that kicks off the very second your trade is executed. Let's walk through what that journey looks like. So first, you've got the trade itself. That's step one, the execution. But immediately after, we move into the crucial backstage work. Step two is clearing. This is where the NSCL figures out everyone's final obligations. And then finally, we have step three, settlement. That's the moment the actual money and securities change hands. Now, it's really important to get the difference between these two. Clearing is basically the bookkeeping step. It's all the math. The NSCCL looks at all the trades made by a broker, for example, and nets everything out to figure out exactly who owes what to whom. Settlement, on the other hand, is the final act. It's the physical exchange of the assets. And this whole thing doesn't happen in a flash. The standard timeline is what we call T+2. The T stands for the trade day. So T+2 just means the final settlement, the actual exchange of funds and securities, happens 2 business days after you made the trade. This gives the clearing corporation the time it needs to do all that math. Okay, so the NSCCL guarantees every single trade, but that's a huge promise. How does it protect itself? What happens if a huge player in the market defaults and can't pay up? This is where a critical concept called margins comes into play. The easiest way to think about margins is to see them as a security deposit, just like you'd put down on an apartment. Before a trading member can even operate, they have to put up some collateral, or a margin. This deposit ensures that if they ever fail to meet their obligations, there's a pot of money ready to cover any losses, which protects the entire system. The first layer of this defense is the value at risk margin, or VAR. It's a pretty sophisticated statistical tool that calculates the maximum likely loss a portfolio could see on any given day. Basically, it's designed to cover 99% of all the normal, expected market swings. It's the frontline defense. But what about that other 1%? The really wild, unexpected market moves? That's where the extreme loss margin, or ELM, comes in. This is an extra layer of security designed to absorb the shocks from those really volatile outlier days that the VAR margin might not cover. And finally, there's mark-to-market margin. Now, this one's different. It isn't about predicting future losses. It's about settling today's. Every single day, the NSCCL calculates the profit or loss on every open position. If you've got a loss, you have to pay it right away. This is so important because it stops losses from piling up day after day and spiraling out of control.
So members have to post all these different margins, but what are they actually using for the deposit? I mean, it's not always just a suitcase full of cash. The system has a really flexible safety net built in by accepting all sorts of different collateral. Yeah, the whole system is built to be pretty flexible. Clearing members can provide a whole range of assets. Of course, cash is king, but they can also use super secure things like bank guarantees, government securities, and even high-quality corporate bonds, and some mutual funds. It allows them to be efficient with their capital while still giving the system the security it means. All right, so we've been deep in the weeds here, talking about all the technical plumbing of the market. But why should you, as an investor or a trader, really care about any of this? You should care because this is the very thing that makes it all possible. This invisible, incredibly complex machine is the reason you can trade with millions of strangers and have absolute, rock-solid confidence that your transaction is going to be honored. It's what removes counterparty risk and builds the trust that is the absolute lifeblood of any financial market. So next time you make a trade, just take a moment to think about the powerful, silent system working in the background to make it all safe and secure. It's the market's silent guardian. And it makes you wonder, right? What would our financial world even look like if it wasn't there?